Welcome to TMS Insights, the July edition. We're going to bring you another one in mid-August as reporting season hots up, and again at the end of the reporting season at the end of August. But it's been a pretty quiet time in the market through most of July, and having said that, it's been quite a good time as the market has found new 6-year highs, Ben. So
yeah, I mean, a real lack of volatility. I don't think either of us could remember a time when the market hadn't had a plus or minus 1% gain. And I think that really comes back to there hasn't been a lot of company news, because most companies at the moment are in their blackout period, where they won't sort of communicate with the market unless they're aware there's something materially different to what the market's expecting in their results. And as we move into reporting season, I think a lot of people, like maybe more ourselves, have been sitting on our hands a bit, waiting to see what's going to come out of this pretty important sort of period of the market. We know that the market's sort of expecting sort of 6 to 7% earnings growth, and let's hope a lot of these companies can deliver.
And that's pretty good. I mean, that's twice what the national economy is growing at. So companies that we're investing in are doing pretty well. Hence, their share prices should basically be quite firm. So,
yeah.
And interest rate settings are positive. So supportive elements to the market overall. And it's all going to change in terms of the lack of information flow. We're going to be besieged by information very shortly.
Absolutely. And a lot of work gets done during this time, looking through the results, speaking to management, going on the teleconferences and hopefully meeting up with them down the track and just getting some insight on how the businesses are going. We only really get to look under the sort of the hood, so to speak, twice a year in terms of how a lot of the companies we own and others that we don't own that we've got on the radar are performing. So it'll be an interesting time, and hopefully there'll be some things to do out of it.
Yeah, well, it's always a revealing time. We think it'll be a good time, but it's always something that gets thrown up that we can't be always expecting. So we look forward to bringing you the news of that. I guess, Ben, one of the themes that I think we might see in this reporting season, and something that's been relevant probably over the last few months, is the strength of the local currency.
Yep.
And how that impacts on some of our investment choices both now and going forward.
Yeah, and it's certainly been something we've been thinking and talking about, in that I think if we go back 6 months, everyone was calling the dollar to 80 cents by the end of this year. And of course, we're not even close to that happening. And if anything, it's actually been pushing higher as interest rate differentials around the world sort of play out. But I think there's two things here we both believe in. Firstly, that potentially there is more earnings growth offshore than there is locally in Australia. The economy still seems to be slightly stuck in this malaise. I think there's a lot of hope about the coalition government coming in and getting business running again, and that doesn't really seem to be sort of taking effect. There are some things to like about the Australian economy. The housing market's strong. We should see some good building production, etc. But I think the general theme we both see is that offshore markets probably offer greater growth. And we've got good buying power with the local Australian dollar at the moment to gain exposure to that. So whether it's, positioning portfolios, toward those companies that do have a larger proportion coming from offshore of their profits, or whether it's investing directly into companies that are listed on overseas markets and taking a higher weighting to international exposure.
Yeah, excellent. And just one of the stocks that we talked about earlier in the year was car sales.
Yeah.
And just looking at some of the bigger players, clients know we also watch REA, and we've had interest in some of the smaller ones, but we've seen some interesting moves amongst the bigger players in the online car and property space, as well as jobs as well, with Seek, one of our longer term favourites.
Yep.
How do you see this playing out now?
Well, I think that there seems to be a land grab at the moment ahead of this. So we saw REA, of course, have taken a 17% stake in iProperty, which has been a stock that you've been very keen on, IPP. Car Sales has taken a decent stake in iCar Asia and is creeping up the register there. And we know that also overnight, Zillow, which is the REA of America, but a long way behind REA, surprisingly, has made a $3.5 billion bid for Trulia, which is the number 2 competitor over there. So there just continues to be this, this push toward, these incredible business models versus the traditional, and I guess this continued sort of destructive sort of influence of technology in traditional sectors, which is something we really need to pay attention to.
And it's changing fast, and it's changing over
Very
a long
rapidly.
period of time. So
Yeah.
it's not a 1 or 2 year thing. It's a multi-year, multi-decade sort of phenomenon, really.
Yeah.
So it's having a big influence. So, I mean, reporting season, the big ones to watch in the first half, because as I said, we'll be coming to you midway through August.
Yep.
But the big ones for clients to keep an eye out and things that we might be in touch about.
Yep.
ResMeds this week.
ResMed's on Wednesday or Thursday.
Yep. We've got quarterly sales from Woolworths.
Yep, and Origin. Yep.
So they're going to be ones this week.
Yep.
And then it sort of starts slowly in the middle of the month, really hots up.
Yeah, that's right. And the majority of the blue chip sort of stocks, you know, your CBA, CSLs, etc., I think are toward the second half of August.
Yeah.
So that'll probably be, you know, one where we get a lot more information, but there are some interesting ones that will come through in the first half. There's, you know, a few companies we've identified we're interested in, but we're not invested in yet, that do report in that first half of August that we might be talking about in a couple of weeks' time as well. So I guess we just want to keep clients sort of up to date with how their companies, you know, are delivering their results, whether there's, you know, some disappointments there, hopefully not too many of those, and hopefully, you know, a lot of positives and a lot of reasons to stick with those businesses and more to sort of reaffirm and, you know, what's going on.
Great. Thanks for that, Ben, and thank you for viewing this July TMS Insights. We look forward to bringing you our next update in 2 weeks' time.